Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. And speaking of YouTube, let me pop over to YouTube, and I've got up like last night's show right now, and one of the things I wanted to share with you is this share button. I would encourage you to use this little baby. If you click on it, pops up all of these various ways that you can share if you have accounts on Facebook, Twitter, Google+, so forth, right? It's easy for you to share this with your friends. You sharing this is the best way for me to see exposure, for others to see what I do. I think I offer something of value. I hope you agree, and I would encourage you, it's one small way you can help out spreading the word. As far as these markets and spreading the wealth, markets up big again. We talked about last night. We expected follow through. And we got it. And we got it in a big way. 2% across the board other than the Russell. And the Russell actually broke out finally. Took it right up until the end of the day. That's why it was stymied. But big breakouts, big pushes, 2.5%. These numbers off the bottom anymore sometimes are kind of unrealistic maybe. But, once they get them going, they do get them going. 2.5%, big moves. I'm not even going to go through the numbers. Dow was up 421 points. I mean, that's how crazy it was, right? And it just kept picking up steam all day long. Elsewhere, bonds selling off big, down 2.25, almost 2 points, 2%. That's a huge move in the bonds. And that's because the Fed's going to raise the rates. And, people start fearing that the bonds are going to have to go up. And the interest rates are going to have to go up, bonds are going to come down, and that's what happens. And then pretty soon we'll see the exact reverse happen again probably. Oil was down 2.8%. This we're going to have to talk about tonight again, and we'll talk a little bit about why this can be down and these up so big. The dollar up again, not that big, but up. And gold's pretty much up $8, 0.75%. So for the most part, another big, strong day to the upside, and these markets loving it, right? So let's go look at them. Last night we talked about we talked about 2 or 3 things, but what we talked about was more than likely we're going to see some follow through, and we were probably going to see it because of the Russell. So matter of fact, let's just pop to the Russell first. The reason we were using the Russell is the Russell was the only one giving us a signal. All the others were inside bars, or maybe they just got over it, or maybe they actually got under it and then back inside, but none of the others gave us the breakouts. The Russell was the only one, and if you remember what we pointed out last night was that the Russell had worked its way back into this higher range, right, and it got back into it right here. And that was the suggestion. As a result of that, the suggestion was that this attempt to test a bottom, right, almost got to it, flipped around, got into it, and then it was a question of can you get the follow through, because if you can, and it did, then you had these 2 swing point highs up here that were waiting to get broken. And waiting to get broken, they did. It breaks them both tonight. That's going to put it in and give the volumes, it's going to put it into a confirmed bullish breakout over 2 swing points on the same time frame. Most likely that's going to lead this thing straight on up, and it's going to push for the next set of highs, which are up here, 12.13.55, 12.12, 12.12.82, 12.13.55. That's the next stop. That's where it wants to go. Now, when I say next stop, that doesn't mean it has to go straight there tomorrow, but you do have breakouts. I suspect you're going to try to see follow through as a result of that. That's the Russell. That's the driver last night on the indexes that gave us the idea that we would see further push today after that big reversal or big move off the Fed yesterday. If we go back now to the S&P 500, the thing here tonight that's key is you had swing point lows that were broken. It was broken right here, and then you had another one broken there. That was this one. We were up testing it last night, right? So first of all, let's remind ourselves what this is, right? When you get a break of a swing point low, that creates what I call retest regens. What is a retest regen? Well, it's the market's way of telling you whether or not the breakout was real or not. In this case, it was a breakout to the downside. And the question is okay, when it comes back to test this bar, is it going to get back over it, or are the sellers going to reassert themselves and tell you that that trend, in fact, is going to continue? Well, we got the answer today on the open. Gets over it, breaks it, and not only does it break it, it breaks the next one. What does that tell you? Well, that tells you at worst case, this thing is in a range trade now, and that's worst case. And if you break it down now into sub ranges, right, because those are about equidistant, you've kind of got the top half, the bottom half. This thing's way up into the top half. That tells me more than likely it's going to go test the highs. Again, doesn't have to do it tomorrow. Matter of fact, it's got resistance right here. But if it gets, if it gets up any more, it's going to be testing the highs and probably breaking them. The Dow Jones looks about the same. Let's pop that one up. And here you had two swing points, both of them broken. So in other words, two retest regens, both broken today. The highest one was up here. Just got over it. That's a break. If you stay over the bar, then it's probably for real. Swing point highs is all left. And I don't know if you're noticing this. I haven't been pointed out, but almost all these charts have volume expanding as they're going back up as well. So it's not just on the downside that they're expanding, which is good. IXIC, which is the NASDAQ composite, pushes up. Now, these are a little bit different, but you did have swing point breaks here, and it's gotten over both of them as well. So you've got a low there, and you can see you're clearly over it. You gap over both of them this morning. And so now, it's a range trade at worst. What's the range? Well, it's the top to the bottom, and that's what it's doing, and it's going to try to make it to the top. NDX, same sort of scenario over here. Really, essentially this exact same trade. It's back over the tops, also wants to go higher. And so indexes, you got confirmation across all the four that last night were questionable. Confirmation that they don't want to go lower, that at worst they're a range, which clearly is the case given how far we went, and that more than likely they're going to go test the highs. Russell already breaks. And I think I said last night, and I know I've said somewhere recently, if the Russell breaks higher, it's probably going to pull everything else right with it. I expect the Russell this time is going to be the one that goes up to test the highs that it hasn't been able to get to at the same time that we get test of the highs here on these other indexes, and then they'll all be in concert, all trying to break the highs of the year together. Remember the calendar. This week is the last week that you have any kind of real volume. You're going to see it really start to taper off Monday, and then there's not going to be any volume the rest of the month. You got how many days? You got 9 days trading left in the year. You got this kind of a move. It's Santa Claus time, folks. They're gonna just crawl this thing higher. And so, everything I look at seems to suggest that's the case. Now, I hadn't done this for a while. I'm going to go back to the S&P to do it. And that is if we look at, and we've talked about this before, but if we look at the ABCD structure that was in place, right? It was initially to here. Well, now you got the deeper retrace. So the ABCD, the B point actually comes deeper now. If you take that as the B and you assume this thing's going to run higher, it is a huge ABCD structure to the top side. Let's just do the math real quick. 1820, it's 100 points. And do 100 back onto this guy. That's 2072. That's not a small number. Excuse me, not 20, but 2172. No, wait a minute, I did something wrong. It is 2072, something's wrong. Let's do it again. 1820. 200 points. There we go. So 200 points onto that is 2172. So in other words, from today's close, this structure points another 100 points. We just moved, what, about 70 or so. What is this, 1972 to, yeah, we just moved 90 points. So we're about, quote unquote, halfway through the move, if in fact it's for real, right? If it's gonna finish it out. So it's something that's been out there. We've been waiting to see how it develops. You know, it was totally unbelievable back here because the numbers were huge here, right? If this had been the move and we hadn't got another retrace, that was 200 points onto that would have been what is that, 2200 or so, right? Even more than that, a little bit more than 2200. So it's still big, but it's not that big. Okay, let's pop over. Actually, I'm spending too much time tonight, but I wanted to go over all those. If I look at the major sectors, I'm not going to go through all these, but all of these are doing the same sort of thing that you'd want to see. They're all coming back up to either test their highs. In the case of like IBB, the XLV, you know, they're coming back to test their highs, or like an XLY, they're coming up to test the breakdown bars. And so the breakdown bars are right here. This is where everything kind of, you know, fell off the cliff. Remember, we got the 7 days down. It's right there that they're going to try to test and try to get over it. Volume expanding nicely here. It looks to me like all of these now are going to switch around and go back to bullish, with the exception of the problem child, which will lead us into the ox markets, and that's the XLE. XLE is coming back to do a retest regen. Note that it's come back within 6 bars, I believe. So you got 1, 2, 3, 4, 5, 6. No, it didn't. So it off of this bar, it's less than 6. It's more than 6. So usually that's just a test into the bar. This one's getting deeper though, and we came back with some pretty good volume. So it was a fairly steep decline. So maybe in this case it is going to get to the top of it. 80.77 is where it wants to try to get to, it looks like. And we're trading what at 78, so maybe another $2 if you can see some follow through on oil, which leads me to the oil market, because if there's danger out here, it's the oil market, right? And I want to kind of talk about that a little bit with respect to what I mean by the danger. You know, once you start, and let me find the oil, once you start caving in, right, like this did, you know, at some point, you know, you're going to reach, and I was talking about this week, at some point, you know, the angle of descent here is not real. I mean, it's just way, you know, for a market this important, that angle of descent's just not going to stand. So the oil market, you know, blows off with this big volume down here, and then today it got within 1 penny of testing it. Now, I don't want to make a big deal of a penny, but I sure wish it would have went 1 penny lower and actually did the test, because you had the lighter volume here, right? And so it looks to me like that probably was the test for now, and you're probably going to bounce off of this given the volume characteristics. So in other words, you come down, even though you missed it by a penny, you come right down to the lows almost. Volume shrinks, which is telling you what? It's telling you that there's more buyers than there are sellers relative to the last time you were here. So in other words, as it goes lower in price, there are less people willing to sell it. They just don't want to sell it no more. And when that happens, what do you got to do? Well, you got to raise the price to entice them to sell it. And so if I look at this, I suspect you're going to see this thing try to rally off of this area tomorrow. So that's the oil market, the way it's set up. Of course, there's a lot of damage here, and it's going to take a lot to get this back up. But I suspect that's going to help the XLE get higher, and is going to keep the indexes from coming down. But if I'm wrong, and if this does do the test and break on a Friday, and that's where you would expect it, so I think tomorrow's a big day in this market, then I suspect the equities are going to pull back on that some. So that's the risk to the equities. Otherwise, I think the equities simply want to trade even a little bit higher before they consolidate. The bonds, let's pop over to the bonds because we had a huge drop today in the bonds. So, get the numbers up here. I mean, these are the large numbers anymore. Almost anything's large anymore. 127.72 back to 124.20. That's 3 points. That's, percentage-wise, that is about 2.5%, about 3% in 2 days in bonds, which typically move about 3% in 2 weeks, most times. Of course, most times aren't these times. This thing moved, I don't know how much that was, but that was a huge move in 1 day. But they go up, they test, they can't take it out, they sell off. Last night I told you volume expands, right? It's important to watch who's doing what. So as you sell down and test into this bar, what do? You test with more volume. That tells you more than likely you're going to go right after it again, and sure enough, it gaps down, right? This thing wants to probably come back to this high, to this area before it's finished, at least. So the retrace now is on, and that retrace will set up the next ABCD structure probably. And where is that? Well, that structure now is there to wherever this thing comes back to. We'll set up the next move, and it's going to try to get over this before it's over. So bonds, and that could take, just like we did here, they could take it 2 or 3, a good couple months before it does it. And it may take less time, but it's going to take a while. And so bonds are telling us, the market can go higher as well. So I don't see anything, in synopsis here, I don't see anything that's going to keep this market, other than oil, is going to keep this market from probably trying to push higher. So, that would be my synopsis tonight. It looks to me like probably more push, and as we think about the next 9 days, more push and crawl to higher and higher levels. I want to spotlight a couple things. One of the things you can always look at in a market is, how do they treat companies that miss earnings? If you're in a bull market, they typically get forgotten. And I know FedEx is kind of a special case in that it's huge, B, it's got a nice growth rate going on with the company, but they totally missed. They sold down hard, they bought them back, hammered it that day, volume comes out of this thing, and look how they spike it back up today. Up 4% today. Yesterday it was down 3.7. Today it's right back to where it was the day before. So the earnings miss cost it 1 day, and it's back to where it was. Now, I don't, like I said before, I don't expect this thing to do anything but range trade for a while, and the range is just going to be, here, or maybe the range is going to be there, but it's going to range trade most likely. But when you see this kind of behavior in a stock that has missed its earnings, that's kind of telling you that this market is really strong. And if you go to a stock that blew out the earnings, like Oracle today, Oracle overswing point highs on the daily, on the weekly, and on the monthly. That's a legitimate breakout. I think we talked about the 5 top stocks last week, if I remember right. Somebody had asked me what was the top 5. I'd have to go back and review it. I know it was a close call, but I know Intel was one of them, and I believe Oracle and Apple were the other two I was looking at, because Oracle was set up nicely. Intel clearly is one of them. I'm going to pull Intel here on a daily. Intel is going to go back up and test the highs. And I know Apple got a nice push today as well. And Apple wants to test that breakdown bar. So big cap stocks trying to move again. Let me look at the other two while we're here, and then I'll see what these look like. So Microsoft, yeah, nothing special, but it's okay. And then Google has had a rough go of it, and Google got a decent bounce today as well. So Google's coming back in to do a retest regen. Now this is going to be a big day for Google tomorrow. 518.41 is trading at 514, and if you look at Google on a weekly, that's a test of the lows on the weekly, and the volume is going to be a little bit heavier, it looks like. Oh no, I take it back. It's testing this one. So it tested these and it couldn't stay under them. It's also testing this one on the weekly. That's the 518.41. If Google trades back over that, and the volume rate right now is 14 versus 18. 14 divided by 4 is, what is that, 3, 4? So it's probably going to have just about the same or less volume. If that happens, then Google does a test of the lows, test failure of the lows, which tells you what? It wants to trade higher. If they don't want to sell it at lower and lower prices, then it wants to trade higher. I'll leave you on that note. Of course, I'm off tomorrow. Look for this market to try to hold and probably push a little bit more, but it's a big move already. If anything, some sideways consolidation, maybe a day. But we've seen this story before, and you know how it works. And I need only pull up one of the charts, put it on a daily. Here's the S&P. Once they start, they can go a long time. Have yourself a great night, folks. Take care. I'll see you next time. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great night. Good night.